Hello, everyone. Good evening, and welcome to another session of AdvoChats. I'm your host, Ashanthi Abayasekaral, and today's topic of discussion is lessons learned from external debt crisis. And as the topic implies, we will be talking about to Sri Lanka. Now, before we begin, and while we wait for others, I would like to remind all of you that you can send in your comments through the chat feature at the bottom of your screen. Our guest for today is Sachintha Pilapitiya. Sachintha is an economic researcher. He's currently a student at NYU Abu Dhabi, and he's also a member of Default.lk. Hi, Sachintha. It's good to have you here. Thank you for joining us.
Thank you for having me. Thank you.
So before we, like I mentioned, today's topic is lessons learned from external debt crises, right? And since the 1970s, there have been over 3 different debt crises, or 3 waves of debt, as it's commonly called. Right, you have the Latin American debt crisis around the 1970s, the East Asian debt crisis, which took place around the 1990s, early 2000s, and then, of course, you have the global financial crisis of 2008. Now, Sachintha, to start us off, would you mind telling us a little bit about these debt crises?
Yeah, thank you. So before I get into the debt crisis specifically, I think because we'll be looking at quite a lot of history, I think it's important to note and understand like why countries go into debt or why countries borrow in the first place. Because there is a general idea when you use the word debt, it's a negative connotation in most people's minds. But there is, of course, benefits to debt, and this is why countries had the tendency to go into debt or borrow from other countries. So, like, since you mentioned the Latin American debt crisis, let me straight away get into it. Post World War II, in the post World War II international financial arena, we see first how financial capital is received into developing countries, and this starts with a decolonization movement. So if we look at the 1950s and 60s, most developing countries received foreign financial capital through this decolonization movement. So it came in mostly as aid. But then this begins to change. Of course, this applies to most other countries, but it's easier to focus on Latin America because that is where the first crisis did happen. And if we go into once again the roots, because most of our audience might not be familiar with many economic concepts, there is a concept generally known as petrodollar recycling. This is basically in the 60s with the discovery of oil in oil exporting countries. These countries tended to have a very high surplus, and they needed somewhere to invest this money. So after they invested this money in most commercial banks, now these banks had a surplus to invest in other developing countries, and Latin America was attractive to most investors. So this is how this suddenly a large amount of money was available to be invested or received as foreign capital in the Latin American region. So talking of like Argentina, Brazil, Mexico, for example. And like I said, with borrowing and like we can kind of relate or correlate foreign capital receivements with growth. So the theoretical expectation was for there to be growth, but what we see happening is this time period simultaneously was also a time where import substitution industrialization was happening in these countries, and we'll also see in Sri Lanka later on. And we see how this growth expectation, however, could not keep up with the debt service repayment responsibilities. So the basically debt turned into an unsustainable situation, And of course, this happens over a long period of over a period of time. So by the 1980s, debt was turning into an unsustainable amount in the Latin American region. But once again, there should be triggers or shocks that we see in the world economy that brings this to a debt crisis. So, for example, and if someone joins now or like 1 minute earlier, they would think I'm talking of Sri Lanka because, or like the current context, because what happened even then in the 1980s was, like I said, there was a oil shock, and oil prices were higher. And developing countries tend to be importers of oil, like ourselves, for example. And it's not something that we can, although we try to cut our imports, we'll still need to import this oil. Um, and with higher oil prices, that means we need a higher amount of foreign currencies to import this oil. So this was one aspect. And along with this, inflation was increasing in developed countries or industrialized economies, which then caused developed economies to increase their interest rates. So the US, for example, had to increase their interest rates, which once again increases the debt burden of the developing countries. So when these things combine, so the oil prices, let me just give some hints. Like if we correlate it now, maybe the Ukraine war increased the commodity prices right now, and then with COVID, we see how developed countries increase their interest rates. So similar, there's a very similar pattern that we'll try and connect later on. But this triggered the Latin American debt crisis. But once again, it was something that was being formed over a decade or so. And then this basically led to the crisis where then investors realized that they might not be able to repay their debt, and then that breaks this inflow of foreign revenue or foreign investments. But that is in very simple terms what happened in Latin America. And then if we go on to the 1990s, and I'll stress a lot on the Latin American crisis because that's what's most relevant to Sri Lanka, in my opinion. And there's many lessons to be learned from that. But if we focus on the East Asian or the financial crisis or the Asian financial crisis, a similarity, once again, I'm simplifying this a lot, but one similarity is how these economies basically one aspect of the debt crisis that led to it was they also attracted a lot of hot money. So what I say hot money is investors will invest this money, but as fast as it comes, it can also leave as fast as it comes. And this hot money, however, like in the East Asian crisis, one thing that happened was banks tended to play an intermediary role where basically they took short-term loans from these developed countries and domestically gave out long-term loans. So then, like when it was time for repayment, they could not roll over their debt after a certain point. And another similar, like something we'll see we can connect to is how in these East Asian countries also the exchange rates were pegged. And then when the US dollar appreciated, and these countries had to be committed to the certain peg that they had, the exchange rate. And when investor confidence once again is lost in this exchange rate, they tend to pull out the money. So that is another thing that we can kind of relate to Sri Lanka later on, that we saw in the East Asian financial crisis. And this started basically with Thailand, but then it also once again spread to other countries across East Asia. And then just not to take too much time, but we know the global financial crisis in 2008. This did kind of spread throughout the global economy. But if we focus specifically on if we are talking specifically about debt, we can focus on the Eurozone, and we know cases such as Greece, where they had a very high level of debt, unsustainable debt. And I think we should not spend too much time on that, because the Eurozone crisis, for example, is constrained by them being in a monetary union, which does not really apply to us. And that brings out much further complications that luckily we don't have. But these are three cases that we can look at to learn of debt crises.
Right. So you mentioned similarities, differences, right? What were some of the key similarities between these three waves of debt and some of the differences that you've identified?
Yeah. So I think one of the key similarities that we find is in all these how these financial before a financial crisis, of course, there is a wave of debt, and like I said, debt itself is not a very negative thing. But then we see how these waves of debt tended to end in financial crisis, which means something is definitely wrong in the international financial system itself, which needs to be fixed and which is hopefully under the process. But one thing that we see is all these debt accumulation or these debt waves started with very low interest rates in at least in developed economies. And if you know anything about investment, you know that investors are attracted to higher interest rates. And it is also cheaper to borrow when interest rates are lower. So this aspect was similar in all debt accumulation waves as well as financial crises. And of course, the financial crisis once again coincides with a global recession because this is the trigger that we see that leads a debt wave into a debt crisis. So, for example, when there is a recession, is especially the United States has been the hegemonic power in the international financial arena in all three crises. So their monetary policies directly affect all these economies. And one similarity that we see is that every time the United States increases their interest rates, this increases the debt burden on the developing countries. So those are two very common aspects of or similarities in these economies. And another one is basically there were like weak structural frameworks of these debt crises. But this, I think, we can allocate mostly to the weak fiscal frameworks of these countries themselves, because most of these countries that went into a debt crisis tended to have what you call their balances. They had large debt balances, meaning both fiscal and BOP crisis. They were already in a fiscal and BOP crisis, which then tends for them to default on their loans, for example. So that's another similarity that we see in all of these cases. And another, I think, key feature that we see is the inefficient use of debt. So, like I said, if debt is supposed to create growth, and that's the whole logic of providing a loan, because the lender will lend hoping that this country would grow and then repay this principal with the interest amount. But then this is only possible if this debt is used in order for the country to grow. So, for example, I can think of like in the Latin American case, for example, most of these borrowings were used in certain infrastructure investments, such as hydroelectricity power plants. But then so once again, on another note, it does not necessarily have to create foreign revenue for an investment to be good. I'm not saying that, but these investments basically did not generate the export revenue for this country to repay this loan. So in that case, we might be able to say that most of this debt was not used efficiently. And of course, once again, there's things like corruption, which is prevalent in most places. And this, I think, is hopefully will be fixed only through transparency of these borrowings, which once again we can apply to Sri Lanka.
Right. So one question that I do want to ask at this point is
Mhm.
the differences between these waves of debt, right? The financial systems all changed. There were differences in the way these borrowings are conducted, in the instruments that were used. Could you maybe give us a little bit of information on that?
Yeah, so like I mentioned, the entire financial capital system started off first as like aid, and it was mostly like if we look at the 1960s. So I'll try to bring in Sri Lanka a bit. Like even Sri Lanka borrowed for the first time in 1955, and we borrowed from the International IBRD, Bank for Reconstruction and Development. Um, and these were like more, all of them were very concessionary loans. Like I said, the mentality was decolonization, and this was the case in the Latin American, like the 1970s and 80s as well. By the time of the East Asian crisis, of course, I mentioned hot money, which means it's private investments coming in, and countries were able to access that. But I think what's most important, or like the most clear difference that we see is in this current or the current debt crisis or the current debt wave is how developing countries or like poorer countries had access to international financial markets. So, for example, and this was a result of the 2008 financial crisis, basically, where we see countries, poorer countries, having access to the international financial market. But I think I'll leave that when we are talking about the fourth wave. Uh, yeah.
Right. So, yeah, so you mentioned the fourth wave of death, right? This is something that's been going on for a while. It started before COVID, and then I think COVID-19 and the Ukraine war kind of worsened the whole thing. Do you mind, first of all, giving us a little bit of backdrop to this fourth wave of debt? And then telling us how, first of all, whether the debt crisis that Sri Lanka experiences is part of that fourth wave, and how we came here.
Yeah. So I mean, once again, most myself included, I was also guilty of this before I studied this area, because we tend to believe that this whole the debt became an entire conversation among non-economists, at least post COVID and post the this global shock, and we tend to think that this was something as a result of COVID, but that is really not the case. So this is why it's important to look at previous debt crises, because we see this wave of debt being accumulated, and then we see a trigger or a global shock that leads to the debt crisis. So, like I mentioned, post 2008, after the global financial crisis, we see a sharp reduction in interest rates in developed countries, and that is to stimulate their economies, which collapsed during the financial crisis. And I mean, it's once again, it's very textbook, because investors are now attracted to higher interest rates in more risky developing countries. And we were able to compensate for the risk by having higher interest rates. And this is where we see this easy flow of money, as economists call it, because there were more funds being attracted to poorer countries, especially like South Asia and South African countries. Um, so this is like, first we should establish that that money was now available for developing countries, and then, so like I mentioned, in the case of Sri Lanka, we had, for example, borrowed in 1955 through like these international development banks and these concessionary bilateral loans. But after 2008, and basically 2007, we had like most of these developing countries had access to the private markets to borrow. And so, for example, another important thing is this is the first time that most developing countries had access to borrow from on their domestic currencies. So till then, this concept's known as the origin sin, where countries normally cannot, developing countries normally cannot borrow in their own currencies. You have to borrow in US dollars. But this was the first time that we were able to borrow in local currencies and also issue our own international sovereign bonds, or issue our own bonds in the international markets. So basically, developing countries had a large amount of access to the international financial or capital market, which is actually a positive thing, but it once again led towards a crisis. So this is the
So,
build up. Yeah.
okay, so this basically started right after the 2008 financial crisis, this fourth wave, or was it sometime
Yeah.
after that?
Yeah. I mean, you can't directly say that the financial crisis caused it. Maybe you can, but I would not go up to that point. But we see like the economic reformations after 2008, especially in developed countries, pointing towards this aspect and allowing developing countries to borrow more and access to financial markets.
Okay, okay, and you mentioned, right, that the interest rates came down after that, after the 2008 financial crisis, right? And that, I think, was one thing that the previous waves of debt had in common as well, right? They all started with low waves of interest. Low rates of interest. And so what other similarities or differences would you find if you were to compare all of these waves of debt, right? The idea is to find something common between all of them. What would you say that is?
I mean, I think we can, what I can say is common, except for the reduction in interest rate, for example, is what triggered the crisis itself, because the COVID-19 crisis was a pretty big shock for the global economy, and then to top up with it, we have the Ukraine-Russia war. And so, for example, if we look at the Ukraine-Russia war, it caused energy prices across the world to increase. And like I mentioned, developing countries are heavy importers of, for example, oil. And we cannot basically, so if you simplify it very much further, a country going through COVID, we have to in terms of welfare, we have to spend on like healthcare, and also our revenue and expenditure is once again imbalanced. And then when things like remittances, tourist income, they start dropping, we have very few choices. And if we cannot now cut off our imports, especially like if you're spending a lot on oil, we need to finance that gap by borrowing. And now that developed countries increase their interest rates, because it's not like only developing countries were affected by COVID. The US, for example, had to increase their interest rates. And when interest rates are higher, borrowing is more expensive for us. And also the current, what we have borrowed is more expensive to repay. And I think like one more catalyst effect that we had to face in this wave was the very strong US dollar. So, and I think this is more prevalent in this wave than the previous waves, because this was a major factor that increased the debt burden of like the real burden, because once again we had borrowed a lot in US dollars and not in rupees. So having to repay this more higher value of US dollars made it even harder for developing countries. So what I would say is, while there's a lot of similarities, of course the cause or the trigger was different, but it's once again very theoretical, or like textbook example where this debt accumulation had to face the crisis due to a sudden shock.
So bringing it back to Sri Lanka, could you first maybe give us a little bit about the Sri Lankan debt crisis? Just general background for those who may not know.
Yeah. So basically, like I mentioned, we borrowed for the first time in 1955 uh, through the International Bank for Reconstruction and Development, and these since then we've invested this for capital projects and whatnot. And but if you look at a graph of like Sri Lanka's borrowing in terms of real value, it's almost exponential, and I think this matches the fact that till we defaulted for the first time last year, Sri Lanka had never defaulted on its current on its debt, or at least rescheduled. It had never done that. I think in 2004, after the tsunami, there was a small reconstruction, but that was mainly done by the creditors themselves. But till then, Sri Lanka had a very good track record of their debt repayments. Um, so what I see is what I mainly identify more than the past. Of course, there this that you need I need to do we need to do more research on this to see where exactly what we borrowed was invested in. Because we, like I mentioned, since 1955, we too have been borrowing, and I think after we opened out to the economy after 1977, this increased more. But we have to see what the real gains of our borrowings were. So whether we were just compensating our own consumption or whether we were investing towards our growth is a good question, and something that we should be checking or reading more about. But what I see, just to get back into the 2007 aspects, so we issued, like I said, just like the international system, we issued our first international sovereign bond in 2007. And then after that, since then, we see that also it is after that that we started borrowing heavily from China. And this shows since 2007-8, we see this highly increasing ratio of commercial borrowing instead of concessionary borrowing. But this is also once again interlinked with us being a middle income country. So we were promoted to being a middle income country, and then you kind of it's harder to get concessionary loans after you are promoted to that point, which forced us to get into these commercial loans, and China was of course attractive. But this is theoretically not wrong if you use these borrowings for your growth. But once again, there's a lot of debate on this, even between economists, of how much debt or like should be there for a country to be sustainable. But what we can see in the context of Sri Lanka was, especially when the COVID-19 pandemic struck, and we were very vulnerable. Our debt was very vulnerable, and we had no backup plan to either repay these loans or to get out of it safely, which led to our default. But once again, we see a similar pattern in Sri Lanka also.
So, having looked at these waves of debts and then having looked at the Sri Lankan debt crisis, what are the implications for Sri Lanka of looking of these similarities and differences? What lessons can we actually draw from them?
Yeah, so I think first of all we have to identify. So if I may get into a bit of economic theory, so some studies, for example, have shown that developing countries, for example, if we look at a correlation between debt and growth, that means if you borrow and your country can grow by borrowing, it says that some studies say that above 35 to 40% of debt to GDP ratio is bad, or like you will have negative growth if you have above this level. And Sri Lanka, for example, last year we had I think around 120% debt to GDP ratio. But once again, I think I saw a question on this also. So if I may address that, like whether debt to GDP can be used as a indicator for debt crisis. But so debt to GDP itself alone cannot be used. I don't think it's a good indicator for debt crisis, because if we look at countries like Japan, the debt to GDP ratio is above or like approximately 250%. So you can't use it individually as an indicator. But certain studies on Sri Lanka kind of show that maybe we should have around 60%. We should bring this level down to around 60 or 70% for it to be sustainable. There is once again a lot of debates around this because some economists also argue that as long as your growth can sustain your debt levels, you can keep debt at a sustainable amount. So the implication for Sri Lanka is basically we should use our borrowings. So we are in this vicious, some call it the vicious cycle of debt, because we borrow and then to repay that borrowments, we have to borrow again. And then, but when it comes to, and this is fine, this is how the international financial system works. But then when it comes to a shock and you lose this and you cannot roll over your debt, that's when you are in a crisis situation. And that's what happened to Sri Lanka. So basically, we have to try and get out of this vicious cycle of debt and try to get into a more virtuous cycle of debt and try to reap the benefits of debt. And I think some ways we can do this is, for example, through infrastructure investment, where if we invest in proper infrastructure and can reap the benefits or like grow over these debt levels and repay them by not having to borrow further, I mean that's the best thing we can do. So the answer is not that we should not borrow at all, because that's a complete shutdown from the international market itself, and that would be disastrous. Like it's very common to hear that why are we borrowing further? We are becoming Nayakario, and it's a very common connotation. But the answer is not that we should not borrow at all. It's about how we use this money that we borrow. And I mean, like right now, I think something you can say is global borrowing is no longer about whether you need money or not. It's about whether you can borrow or not. So basically, do investors have confidence in you, or like so that's like one of the main things that matters, especially when private investors are concerned in this borrowing process. And I think that is what Sri Lanka should focus on. And I think this is something that's been coming up, especially with the IMF conditionalities, is the transparency of these borrowings. And I think that is very important, because we see a lot of we see people talking a lot when it comes to like increase in taxes, for example, which is common all over the world. But this like borrowing is also equally important, because people can easily ask, okay, I have to pay taxes, but where will my tax money go? That's a very common question that we see everywhere these days. But we should also be asking the question, okay, we are borrowing, but where does that money go? I think that's how we should think about debt.
Okay, so moving towards this whole topic of debt restructuring and dealing with debt, right? Somewhere, I think in around November 2020, right, the G20 introduced the common framework. A few months prior to that, they introduced, I think it was called the Debt Service Suspension Initiative, the DSSI. First of all, what are these two initiatives? What do they do? And why don't they work in our instances, in case of Sri Lanka?
Oh yeah, that's a good question, because I think so. Just to give the context once again, like the United Nations Development Program, I think in 2020, they issued a report saying that around 50 or 60 poor countries or developing countries were at a risk of a debt crisis, and then countries had to do something about this. And one of the most important things, like I said, countries have been these poor or developing countries for the first time have had access to these international financial markets, and especially like private lending. And the DSSI was basically a forum for this. It allowed, I think this was once again about 70 or 72 highly indebted countries to not restructure, but to push their debt repayments forward. And this was done by the Paris Club countries, but even China was, according to my knowledge, included in these conversations. But what is important about the DSSI was that it did not take into account or like facilitate a reduction or cancellation of debt. It only rescheduled the debt repayments, and this was done, I think, in 2021. And I think one of the failures of DSSI was that the private sector was not involved. And like I mentioned, private investments is a big deal in this debt crisis, and that is where I think the G20, which is led by India now, they came up with the common framework. This is like one step above DSSI, or like better than the DSSI in the sense that it included private investors as well, or like the private sector as well. But once again, here the problem is the common framework also, it's very hard to coordinate with private lenders, and like make them take a haircut, for example. It's very hard to do that. It's not the same as it being another sovereign or a bilateral lender or international development bank, for example. So that these are like some of the shortcomings, but once again, it sadly does not apply. Even the shortcomings don't apply to Sri Lanka, because we are technically too rich to be part of these initiatives, because we are once again, and these evaluations were made based on pre-COVID income levels. So Sri Lanka is a middle income country, and therefore we cannot participate in these initiatives.
I see. So one final question, right? Because we had the IMF deal come out on Tuesday. What do you make of it? Is this our way out?
Oh no, I think that's a very ambitious thing to say. I wish it was that easy, but that won't be the case, because like I mentioned, we should not make the IMF loan. I think there's a lot of celebration happening around this. Of course, it is a milestone in our debt restructuring process and coming out of the debt crisis, but it is only a milestone, and we have a long way to go beyond this, because what we have to remember is this is also a loan and something we have to repay. And and like I said, if we think of taxes, and like if we are so concerned about where our taxes go, we should also think about where this money goes. And it's pretty clear that the IMF loan, for example, it's mainly important in creating, for example, investor confidence in the country, because we already saw that in the appreciation of the rupee, for example. So it is definitely a positive thing. But I have also read some studies, for example, that show that the IMF loans, for example, act as a catalyst in the reconstruction of an economy. And this depends on many things, and it's extremely political as well, in the sense that the government popularity, for example, matters a lot in whether an IMF loan will have a good or bad outcome in the country. But I think this IMF loan is good in the sense that its conditionality, it is of course its conditions are very hard in the short run, but I think these are necessary reformations for the country. And these are, once again, this is also where it is important to look at previous debt crises, because we've seen, so if I quickly touch upon the Latin American debt crisis once again, when they were about to default, for example, and macroeconomic stabilization was recommended for them, or like a reconstruction of the economy, they instead opt. It's very politically not appealing to do those reconstructions, and therefore they opted not to do that. And what we saw in the Latin America also was the government, since no one else is lending to them, they turn to the central bank. The central bank prints money, and then there's inflation. So this is basically what happened here. So we should learn from those mistakes. We don't have to make all the mistakes ourselves to learn from it. So we can look at these past examples. But my answer is basically the IMF loan is definitely an achievement for the economy, and it's a stepping stone. And the most important thing should be the transparency of these loans from here forward. And I think we have achieved some very important things, such as central bank independence. There's a new monetary law, for example. So these are major achievements, which once again the IMF conditions, which are tough and not perfect in any sense, but they will push our country towards these reformations, hopefully.
Right. So I'm afraid we're out of time, so we can't really take any questions. But this was a very informative discussion. Thank you so much, Sachintha. And I hope we can have you again sometime on AdvoChats. To all of our viewers, thank you so much for joining us today. If you would like to see more Advocata content, then please follow us on our social media pages. Thank you and good evening.
Thank you.